Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor, and it's just for educational purposes only. And now I've got that out of the way, let's jump into some zero bullshit TA, shall we? Exactly what you guys are here for. Now, following on from last week's update. So last week we did an update, obviously, on Thursday, like we always do. Price was lingering around here. Since then, all we've done is gone sideways a little bit, and we've had another push up to where we are right now. Okay. Obviously, big day yesterday. The ETFs were approved, and trading with them goes live today. Now, there's going to be a hell of a lot of FOMO in the market over the next week or so, because obviously the headlines are going to be coming out. I've already seen a few this morning. Bloomberg, 4 billion expected inflows into the ETFs and all this good stuff. And just to set the record straight, from my point of view, it doesn't really interest me one bit. Okay, yes, it's good news for crypto as a whole because it's starting to be taken seriously by the big boys. However, that is not going to affect how I'm looking to trade this. So let's talk about the major levels, because there's no real trades in the group to run through this week. We had a couple of scalps. That's about it. Effectively, it's just been slightly up, and there's been no real decent setups on the horizon on the lead up to the ETF approval. We had a good couple of scalp shorts with the fake announcements, but that's about it. But this leads us on to where we're looking at right now. So it's the same region that we've been talking about now for what feels like forever. Where we are right now, we are up into a major sticky zone, in my opinion. Now, this sticky zone here is not somewhere I would be FOMO longing, okay, especially not on a high time frame. Maybe some low time frame plays for longs, yeah, fair enough. But for a high time frame swing perspective, this is not the region in my opinion, for my style anyway. You know, you guys might subscribe to a different style and you might just be a long only trader, whatever, it makes no difference. But for me, we're in a major sticky zone, okay? Now, I said this last week, regardless of your TA style, this is a major region, okay? So whether you're a Fibonacci trader, whether you're a volume trader, whether you're a supply and demand style trader, regardless what you want to call it, this is a major sticky zone, okay? And it's a major sticky zone until proven otherwise. Now, what we can see here is we've got the volume point of control, which is based on the top range. So this is based on the 69k to 29k range, which is obviously the old top range. Now, obviously, if you want to mark that out just so it's really obvious to you guys, then there you go. That's what it looks like. There's the top range. Obviously, we're at the EQ as well. And I was saying this again, I've been saying this for the past couple of weeks. This is not the place where I'd be FOMO longing. Okay, so we're in a major sticky zone. We've got the golden pocket just above us. Okay, the golden pocket just above us, which again is a pretty obvious region. Now, historically, Bitcoin does like to react at high time frame golden pockets. Is it going to be any different this time? We'll wait and see, because nobody can predict that. Nobody knows what's going to happen in the future. However, it's a time for caution. So, as we can see here, we've got this golden pocket above. Now, if you're looking on the volume profile here, the point of control is just below it, roughly sitting around 47.5k. Now, just above it, you can also see there's another high volume node just above, which is sat on the 618. Okay, so the plans for this, I have started to skim profits off any longs that I've been holding, including my spot positions. Does that mean I'm fully closing out? No, it just means I'm taking profits, and if I'm given an opportunity to add back in, then I will add back in. So, big region here. If we start to reject and show some weakness in this region, then I will happily be looking for hedge position short. However, this is not something that I will be blindly shorting in this region where we are right now, or even if we do come up higher. What I want to see is I want to see that market structure shift. I want to see some bearish absorption. So what does that mean? I want to see people longing aggressively into these levels, but not getting any follow through. So therefore, on the CVD chart, we should start to see some bearish divergence. If we start to see any of those things, then I will happily look for those shorts in that region. If we don't see any of those things, then I won't be shorting, and I will just sit comfortable in longs and wait for higher prices. Now, if we do start to clear this golden pocket and continue up, then the next major region that I'll be aware of is around this 707 fib here, which also lines up with the value area high of the overall top range. Now, this is a value area high, but it's also within a thin volume area. Okay, so if it is going to come up to this, then likelihood is it's probably going to travel through this region quite quickly. So that what that means is either a quick spike up and a reverse, or it just travels straight through it and there's no reaction at all. Now, realistically, if we do travel straight through it and we get up towards this 786 region, then this is the last high volume node. If we can flip that, then realistically, there's no reason, or very little reason. Obviously, we're not speaking in facts because we're traders. We're not going to contest the all-time high, but we need to flip this 57, 58k zone. If we can flip this 57, 58k zone, then realistically, we can be looking up at contesting the overall highs. However, there's some big regions, obviously, to flip before then. So, first and foremost, as said, here, next, here, next, here. And it all lines up. Again, we've got the confluence because we've got the volume profile as confluence. Okay, so they're the major sticky zones above. Now, what about below? Well, below, we're going to do a different tact on the volume profile. We're going to go from November 22's lows up to where we are right now. And what we've got now is we've got a trending volume profile. And this paints a nice clear picture. So if we do start to roll, let's zoom into the daily here so we can see this a little bit more clear. If we do start to roll from this region, then first and foremost, this range should be considered support until proven otherwise. So if we get acceptance back into this range, we can continue trading this range. If this range doesn't give us any support, then realistically we can be looking back down at the next high volume node. Bear in mind, look, this is thin here, so it's probably going to travel through this region quite fast, which that is from underneath this range here, roughly around 40k, all the way down to about 37, 38k. This would be my next area to pay attention to. However, this is more of a high risk area, don't get me wrong, because we run the risk of coming back into this upwards consolidation. Now, I've talked about this over the past few weeks. This upwards consolidation that you get like this, I never am a fan of this price action. And the reason why I'm not a fan of this price action is because anyone that's been longing throughout this region has got the stops on each one of these lows, which means with enough force to get back below them, we can see a cascade effect through these. And if we do see a cascade effect through these, bit of a cascade liquidation phase, then we can be looking back down towards the bottom, and realistically that's coming in around 33 to 34k. Okay, and if you're bullish, you want to pray that that holds, because if that doesn't hold, then we're going to start coming back down towards the 30k sort of zone, 31, 30k ish. Okay, and once again, we're just trading level to level in this environment right now. Am I expecting a flush? Well, I'm not expecting anything, but likely it is we do get some sort of flush, but at the moment, any flush that we are having are being bought up very quickly. So we have had some flushes. We had an initial flush that happened here until the wick got backfilled. We had another flush that happened here, and we're starting to get some really wicky price action here. So there is pressure to the downside. However, at the moment, it's been continually bought up. Okay, and spot is doing a lot of the buying. It's leading the way at the moment, and that's something that we can see if we look over here. We can see that the spot price, the spot buying on CVD is continuing to buy well, perps continue to sell off. So it's something to be aware of. There is still strength in the market. Now, big sticky zone. Start to drop down. First and foremost, you don't want to lose this consolidation here. If you start losing 40k, then we can start looking back down towards 37k, lose that, 34, 33k, and then lose that, then we're coming back towards this zone down here, okay? Value area high first and foremost. You'd hope that that holds. If that doesn't hold, then we get acceptance back into value, then we're going to start looking at lower prices. So, that's that. Now, obviously, if you want my actual levels that I'll be trading and my full daily trading plans, then first and foremost, come over to our website, which is spitfiretraders.com. Links down in the description. From here, you can get access into our free Discord. And if you do want access to my daily trading plans and over 70 modules now, educational modules, then come down here. We've reintroduced the annual membership. So obviously, if you want to get an annual membership with a big discount attached to it, then you can sign up for the year. If not, the monthly membership is now sitting at $100 per month, or 79 Great British Pounds, depending on what country you're from. And you get access to all that. And obviously, you can see here, we've just done this morning's members live stream update, talking through my trading plans, the levels that I'm looking to trade, and what I'm looking to see at those levels to take a trade. Okay, and obviously you can see here, you can see all the educational content that we've got, and we'll be adding to this again on Tuesday. So we do 6 live streams per week now. And yeah, if you guys want access to that, head over to our website. If you've enjoyed today's content, don't forget to hit that like button. If you're not subscribed, consider subscribing. And don't forget to hit that bell notification button, because you don't want to be watching these videos a week after they've been released. Otherwise, it's pretty pointless. All right, gang, that'll do. As you were. Bye bye.